For some, the global financial crisis was a disaster. Others learned to move on and profit from the brave new financial world. Which group would you rather be in? I'd like to be in the second group, I hear you say. Well, keep watching, and you could be. You see, before 2008, as long as they had a fair amount of cash equity, property developers used to get their funding from the banks, which suited the banks very well, because it paid a great return and was lower risk than other types of lending, thanks to the lending being secured on the property. But if ordinary people like you and me wanted to access this wonderfully profitable market, we had to buy into things like shares, unit trusts, or real estate investment trusts known as REITs, which meant, 1, we didn't have a choice which properties we invested in, and 2, we took on all the risks of the stock market. But then, in 2008, the entire financial world changed forever. The regulator made it much more expensive for the banks to lend on real estate developments. They still find it extremely attractive, but where they used to lend up to 75% of the value, they now really struggle to lend more than 60%. And this can leave a funding gap for developers. Here. Which is the good news you, the investor, have been waiting for. Because CapitalStackers spotted the opportunity very early on. For crowdfunders like you to work hand in hand with the banks, bringing investors, developers and banks together in one online platform to fill the funding gap, building on the bank's risk assessment and due diligence and adding our own for extra security. So this allows the banks to do their job, funding the construction and keeping the project liquid until it's complete. And it lets the developers do their job, building new properties at a time when we need more housing, while giving a new type of opportunity to investors hungry for better returns. So just in case you missed how important this peer-to-peer finance revolution is, let's cover that main point again. Ordinary folk who have anything from £5,000 upwards in cash join the bankers in lending to developers to make typical annualised returns of 10 to 20% by giving loans secured on property while it's being built. So you can see, whilst the returns can be high, the risk is no more than the banks have been building their investments on for years.